Reverse charge mechanism, RCM, is a system in GST where the liability to pay tax is shifted from the supplier of goods or services to the recipient of those goods or services. Under the normal GST system, the supplier collects GST from the buyer and then deposits it with the government. Under RCM, this process is reversed. The buyer directly pays the tax to the government on behalf of the supplier. Why was RCM introduced? The primary objectives of the reverse charge mechanism are to bring the unorganized sector into the tax net. RCM ensures that tax is paid on supplies from unregistered or unorganized suppliers, as the onus to pay tax is on the registered recipient. To increase tax compliance, by shifting the responsibility to a registered and compliant recipient, the government ensures a steady stream of tax revenue. To tax imported services, when a business in India imports services from a foreign supplier who is not registered in India, it's impossible for the foreign supplier to collect and pay Indian GST. RCM solves this problem by making the Indian recipient responsible for paying the tax. When is RCM applicable? The RCM is not a universal rule. It applies in specific, notified cases under the GST Act. The main scenarios are supply of notified goods and services. The government has specified a list of goods and services where RCM is always applicable, regardless of whether the supplier is registered or not. Examples include services provided by a goods transport agency, GTA. Legal services provided by an advocate or firm of advocates. Services provided by a company's director to the company itself. Sponsorship services. Supply from an unregistered person to a registered person. If a GST registered person purchases taxable goods or services from a supplier who is not registered under GST, the registered recipient is liable to pay GST under RCM. Import of services. If an Indian entity receives services from a supplier located outside of India, the Indian recipient must pay GST on these services under RCM. Key aspects for the recipient. Mandatory registration. If a person is required to pay tax under RCM, they must compulsorily register for GST, even if their turnover is below the normal registration threshold. Self-invoicing. When a registered person receives a supply from an unregistered supplier under RCM, they are required to issue a self-invoice to themselves as the supplier cannot issue a tax invoice. Input tax credit, ITC. The recipient is eligible to claim the tax paid under RCM as input tax credit, provided the goods or services are used for business purposes. However, the RCM tax must be paid in cash and cannot be offset using existing ITC. The credit can be claimed in the next month's return.